Hello builders and innovators, and welcome to another episode of launching your Web3 startup. So in this startup we are going to learn about the business model surrounding the various blockchain ecosystems. So I just want to start with a very interesting quote which says that the startups don't fail because they lack a product, they fail because they lack customers and a profitable business models. So most of the startups, there has been like stories where startups just keep on raising funds. WeWork is a classic example, but it failed to be profitable. Though WeWork was successful in making a multi-billion-dollar business empire, but it failed because it had lack of sustainable business model. So guys, in this episode I'm going to talk about a guide to business modeling for Web3 startups. So I'm going to talk about what is a business model, why is it important, and what are the various different kind of business model which you can use while building your Web3 startup. So the biggest question is, what is a business model? The business model basically showcases how creative or reflective a startup is and how it aims to make money at the same time while solving real problem and creating very strong value proposition for its community. I have been again stressing on this one very important point, which is that the Web3 ecosystem and Web3 startups is all about community. You have to start treating your customers as your community, and you have to go all the way just to make sure that there is highest amount of transparency, there is highest amount of satisfaction, and at the same time they are being heard. There is like a complete open source forum where community can voice up about a startup's product or services. So you should basically completely focus on creating, delivering, capturing and elevating your value in the Web3 business landscape. So most of the successful Web3 companies, in fact all of them, are very community centric, and this particularly Web3 Today guidebook will help you and will serve you as a business roadmap in every stage and every decision you make. So guys, this is a very important lesson, and just to make sure you just stay focused and also do a lot of market research in understanding what we are going to talk about today. So guys, there are like various token based business models. Most of the Web3 companies, all the Web3 companies, they actually follow and focus on token based business models, and these token based business models are very complex because there are a lot of angles to it. One is the regulatory angle to it, which is most important, and at the same time creating value just to make sure that your token doesn't get dumped when you launch. So there are multiple business models, and I'm going to talk about each of them in detail. So the first one is platform based business model, token based models, service based models, product based models, revenue based models, blockchain based business models, and DAO models. So let's start with a DAO model. So DAO stands for decentralized autonomous organizations. So it's a purely a community driven model, and it's basically ideal for enterprise and administration based startups. So for example, Ethereum, right? If you look at Ethereum is a DAO, right? So people who hold Ethereum have a lot of rights on basically processing the transactions, right? They can stake Ethereum to become a validator on the node and can earn additional Ethereum. They can also vote on the Ethereum proposals, which is called EIP, Ethereum Improvement Proposals, and they can also publish a proposal. So the idea of a DAO is that a serious token holders or a serious person who is a part of your stakeholder or a serious community member who is a stakeholder of that particular network should be involved. So DAO actually helps you in driving highest level of governance. At the same time, it also gives you influx of ideas and also opens your platform to highest number of community members, because community members trust DAO based business model. So this is ideal if you're thinking of building like an enterprise or a blockchain platform, something like Uniswap or a own blockchain network where actually finance plays a very important role, and you're talking about DeFi and things like that, or even in your NFTs. DAO plays a very important role. So structuring a DAO governance model is very essential because you have to look at the regulatory point of view and also community standpoint of view, and all DAO decisions and activities are also transparently recorded on the blockchain, providing public visibility. So which means whatever the improvements or things which is being proposed and accepted is implemented via blockchain. So think of DAO models having like a shareholders but on the blockchain, right? So in traditional world you have shareholders, right? You being a shareholder of Apple, Google, Microsoft, you go to a portal and you vote. So there are challenges, right? The challenges being is that you may not have that amount of access or that amount of transparency where you can actually put out your thought or your idea in front of the entire shareholders, right? But with DAO, it's completely redefining that how enterprises and how companies react to their stakeholders, how they present themselves to the stakeholders, and also how stakeholders interact with them. So it is essentially establishing that very transparent way of a two-way communication between the platform project and the community. So DAO again has three types of DAO. One is protocol DAO, investment DAO, and service DAO. So protocol DAO is more like a governance system which is required to manage a decentralized protocol. So a protocol is nothing but a new blockchain network which has a new consensus mechanism and which has a rules and regulations and which are basically governed by protocols. So for example, MakerDAO, YearnDAO, right? So these kind of DAOs, they essentially are a protocol. So MakerDAO is an AMM protocol, right? So essentially the community holders or the DAO holders can participate in the governance of MakerDAO, can vote, can pass proposals, can suggest on the existing proposals, and they can work very closely with the core team of MakerDAO in providing them more feedbacks and suggestions with respect to the ecosystem. The second is the investment DAO. So investments DAO are the networks which decide upon investing in the early stage Web3 startups. So examples are DAO Ventures and Syndicate DAO. So let's say you are an investor and you want to invest into some of the projects, so you can become a part of that DAO and you can actually vote whether that particular fund should invest in these kind of companies or not. So this is very, very disruptive to the traditional way of investing where VCs raise capital and the investors actually become the GPs or the LPs of the fund. And then you become a partner of the fund, but at the same time, in most of the cases, GPs and LPs don't have the voting right. I mean, they only have a voting right when the transaction size is above or the deal size is above a certain threshold. But here, everyone, irrespective of how much amount of you have invested, if you're a DAO holder, you can actually vote, and this is purely driven based on the majority. So this investment DAOs are actually creating much more transparent way for projects and in fact for companies and venture funds to invest. So if you are a VC or if you are a if you are a person who has a very extensive background and looking forward to launch your own fund, you can actually look at investment DAO and actually build a very transparent way of investment. You can actually disrupt the way traditional investment model works. The third is the service DAO. So these DAOs basically they house expertise employers which actually guide, or basically they are like advisors, right? So they basically advise the projects that how their roadmap should look like, and in return for their services they take basically the DAO tokens, right? So the service DAO is not like exactly like an investment, but it is more like an advisory kind of a model. Let's come to the second business model, which is platform based business model. So here are the examples of certain Web3 companies like Binance, right? So Binance has their own token which is called BNB, right? So BNB can be used as a utility token within the exchange ecosystem to facilitate reward. So these are the reward tokens, but Binance is like a platform. Let's look at Web3 today, right? So Web3 today is like a learn to earn media platform where innovators and learners come together. So when you are engaging with the platform, you are getting like the Web3 tokens or the Web3 points, which you can actually convert it for a lot of different things and use these tokens or use these points within the entire ecosystem. So similarly, platform based business models have been very profitable, and it's very interesting for investors to look at because there's a very transparent and very crystal clear, or rather I would say a proven business model, right? So you either make money via advertising, or you make money from the transaction fee, or you make money by selling certain amount of products or services to the users. So platform based business model, and if you have like a token, you can use these tokens as a reward and the loyalty tokens, or more like a utility token which users can hold to unlock more value from the platform, because platform aims to offer multiple opportunities to the community members and to the token holders. Let's look at the token based business model, right? So again, token based business model are like essentially of two types. One is single token economy and the other is dual token economy. So as the terminology suggests, single token economy are ideally for the networks that focuses on one services, for example Ethereum, right? Or for example Polygon Matic. So Ethereum is a blockchain network, so it's providing the blockchain infrastructure to companies or to Web3 startups who want, or Web3 communities who want to use Ethereum as a network or as an infrastructure to build their products, services and platforms. So the entire transaction fee on this blockchain network is facilitated through Ethereum. So that's why it's a single token economy, and again they have decided to keep things much simpler. So Ethereum token holders also get a lot of governance rights, a lot of voting rights, and also they can become validator on the Ethereum network. So that is the idea of the single token economy, while they are dual token economy model as well, right? So dual token economy model, one is like the MakerDAO, right, and one is DAI. So in the dual token economy model, you have one utility token or you have one governance token, and then you have another token. So in case of MakerDAO, you have a MakerDAO governance token which you can use to which can be used to become a part of a network, and then you have a MakerDAO stable coin, right, which is the core utility token or a stable coin, which, or a decentralized stable coin, which can be used within the Web3 or the crypto ecosystem. Similarly, DAI, so DAI has a governance token, so governance token holders, they vote on proposals, they basically decide how the roadmap should look like, but at the same time DAI also has their stable coin, right? So that's the two kinds of business model: single token economy based business model and dual token economy based business model. So depending on your idea and the kind of value proposition you are offering, it's very important to carefully select that what kind of a business model or what kind of a tokenomics you want to offer. Ideally, it's always good to have single economy or a single token based business model, because it's much simpler for people to understand. But if you're in DeFi space, you need to evaluate your token models very carefully, because you may not want to end up into a situation like Luna, right? So you have to very carefully evaluate that what could be the consequences. You have to think of a network of attack. You have to also think of what if a bad actor acquires 51% of your tokens. How would you protect that? Because ideally a 51% token holder can have all the voting rights. So you have to define whether the voting rights you are defining is irrespective of the wallet holding. For example, like if a single wallet holder holds 51% of the token, since it's just one address, they should just have one voting right. So similarly, it's very important to define all of that. Now guys, let's move on to service-based business model. So service-based business model utilizes advanced Web3 tools and technologies to give the users a taste of access to decentralization. They are also known as blockchain as a service, or a BaaS. So service-based business models are traditionally companies which actually provide like infrastructure services, most likely, but there could be other service-based business models. For example, Web3 Ventures, right? So Web3 Ventures helps startups to build their product, go to market. So we actually take startups from ideation, scale to going live. So service-based business models are essentially focused in delivering services in a traditional way, but specifically focused to Web3 industries and Web3 companies. So let us take a classic example of AWS, right? So Amazon is, as we all know, is a traditional web services or an infrastructure company. Their popular product is known as Amazon Cloud. So they essentially provide, blockchain tools and a lot of DevOps for blockchain startups, where they can actually use their infrastructure to scale. Because most of the blockchain companies, they definitely need infrastructure, they definitely need cloud, because it's very expensive to store everything on the blockchain. So they need infrastructure to manage their DevOps for sure. So there are other Web3 service-based companies such as IBM Blockchain, Oracle, Microsoft Azure, and also Snapper Future Tech. So Snapper Future Tech is a company which is an enterprise blockchain company, and we provide a lot of blockchain products, services, and solutions to companies. Now let's focus on revenue-based business models. So revenue-based business models are most likely the traditional business models which exist in the Web2 world today, which are something like subscription-based, premium, and user revenue model. So Web3 today is one of the classic examples of revenue-based business models, because we have subscription-based business model. There's a freemium model. So Web3 today is completely free, right? We provide all content for free. In fact, we reward users to engage with the content. So we are a combination of a freemium and a user revenue business model. And then there are a lot of other business models like marketplace business models, right? So marketplace business model are like an e-commerce company or an Amazon, but for Web3 world. So let's take a classic example of OpenSea. OpenSea is one of the most successful marketplaces for trading NFTs, right? So OpenSea generated in 2021 the peak of the crypto bull market, over $27.5 billion in sales. And then looking at the blockchain based business model. So blockchain based business model, their underlying fundamental focus is to build an infrastructure or to build a blockchain network such as Ethereum, such as Polygon, and they make money by charging network fee or the transaction fee, which is paid in their tokens, right? So they actually have three parts. One is the consensus, the second is miners and validators, and third is the sharding and hash and scalability function. So consensus is something like proof of stake, proof of work, which is required to govern the entire blockchain network. And then we have miners and validators, of course, are the one who basically provide the infrastructure to the network. And the third is the sharding and the hash function, which contributes significantly in the scaling of the blockchain network. So here's like a quick comparison of a lot of blockchain protocols, right? Bitcoin is the most popular cryptocurrency. It's the most popular blockchain protocol, which is purely backed by proof of work. And then we have Ethereum, which was previously on proof of work, but for scalability, to tackle scalability issues and all, they moved to proof of stake. And then we have Cosmos, which is working on interoperable and they are trying to build internet of blockchains. And then you have Solana, which is completely focused on high speed, low latency transactions. And then the important thing at the end of this session is to find a right business model for your Web3 startup. So you can actually divide it into 4 parameters. The first parameter is determining the nature of your startup and identify how it helps your users. Guys, again and again I'm stressing on this point that the community first is the approach for Web3 companies. So you have to define that how it's gonna help your community. Second is mapping out your revenue streams and cost structure. You need to get your cost in place, you need to get your revenues in place, you need to define the every step of your business and make sure that where are cost, where are revenues, and how you can be sustainable. The third is the defining your key partnerships and resources. This is essentially your go-to market. You can partner with several protocols, and Web3 today is open to partnership with everyone and anyone. All we want is that we want to give our users more and more insights about the Web3 ecosystem, give them more and more products and services, and help companies at the same time to connect with the users and understand that how they can actually build better products and services. And the important thing is potential risk and challenges. One of the key risks in the Web3 ecosystem which exists today is the regulatory risk, and of course the product risk, because if you don't get your product right, you may prone to a lot of hacks, a lot of attacks, and your users may lose significant funds. Even like popular blockchain companies and Web3 companies have been victim of hacking attacks, and they have lost a lot of money. Billions of dollars has been lost in hacking attempts. So building a product and at the same time mitigating your risk is also very important. You can mitigate your risk by insurance, or basically getting smart contract auditing in place and things in like that, by using a very strong custody for holding your funds. So there are several ways of mitigating the risk, and you have to be very careful on how you mitigate a risk. This might not be a problem if you're an early stage company, but as you move on to a growth stage, this becomes a very critical part of your business. So to summarize the steps for developing a right business model, the first is basically identifying your right target customers and understanding their needs, defining a very strong value proposition and how you're going to differentiate it from your competitors, mapping out your revenue and cost structure, determining the key partnerships and resources, and assessing the potential risk and challenges. These are some of the critical considerations while revising your revenue streams and pricing strategies, because this is where I have realized that the most of the companies and the startups need help. So with revenue and services being one of the biggest part of the Web3 startup, the right kind of pricing strategy is absolutely essential. So the important thing is that there are a lot of ways on how you can actually attain revenue, right? So some of the companies can attain revenue by directly selling NFTs, assets such as NFTs, right? NFTs are becoming very popular, and because they can also be used to define the real world assets onto a blockchain. And then you can also have like a thorough designated revenue model. If you're building a blockchain infrastructure or you're building like a blockchain services company, you know that what you're actually offering to and what are your costs and what should your profit margin looks like, how much your competitors are offering the similar kind of product and services, right? And of course you need to experiment with your pricing strategies and be very dynamic, because it takes time to get to a product market fit. Everything basically goes hand in hand. You have to make sure that you have all of the puzzles at the right place, right? And you actually cannot screw up here, because you have a lot of community involvement here. So once you start losing a reputation, it's very difficult to get it back because those users are never going to come back to you. So of course, these are some of the successful Web3 business model companies which exist today. One is Solana, Polygon, Binance. I mean, the list goes on and on. So this is quickly about Solana. So Solana focused on one problem, which is basically reducing the transaction fees and transaction time. They are one of the most fastest blockchain infrastructure. So they are a layer 1 network and their revenue model is purely transaction fee. Second is Polygon, right? So Polygon is also a direct competitor of Solana, but they offer altogether different technology. They provide sidechain solution. They are a layer 2 solution on the Ethereum blockchain. So their business model is DAO and token based business model, and revenue basically comes through the governance, tokens, and also staking. And then there is another project called Audius. So Audius is like a decentralized audio streaming platform, and they want to cut all the middlemen which are involved in the record label business. So their business model is token based and marketplace, and the revenue model is like a traditional revenue model where they take 10% of the transaction fee. So they are more like on a services based business model. So guys, summarizing, we have like analyzed a lot of successful business models, and now you have an idea of structuring the right business model and revenue model for your business based on the problem you are solving. So guys, best of luck, and thank you so much for watching the video. And then I'm really excited about the next session. So see you in the next one. Bye bye.